A very quick update here on nat gas, gold, silver and crude oil, starting with natural gas as usual. So what do we have right here? Here on nat gas, as you can see, since my last video, the price is still trading above this trend line, and now the way you place your trend line is not randomly. There is little rule for that which I'm going to give you. If you're placing your trend line just anywhere on the chart, that is not valid. You need to see at least 3 touches when you place your trend line, and if you mark it from here something like this, and if you see we have 3, 1, 2, 3, even 4 touches here, that could be a fake out as well, but that's why I always say I want to see good momentum below 50 EMA, in this case a trend line. So that is how you mark your trend line. If you push it even further, as you can see, this trend line acted as a resistance, support, 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 support. So that is what I want you guys to learn, that we are not marking trend lines randomly. We have a little rule for that, at least 3 touches, and we are not forcing trend lines like this. So make sure once you mark it, at least you have 3 touches, and it should act as a level of support and resistance. So at this point, what to expect from a price is still pushing upwards, is still not bearish, and we do have a good bullish engulfer right here. The reason I did not enter this trade, because like I said, for me, I'm really cautious for commodities, but that would be a weak entry, but that is totally valid, and it's also a swing low engulfing pattern. We took a trade yesterday right here, exactly the same condition, a swing low engulfing pattern, but that was a very good trend intact trade we took in the priority group. Now exactly the same, we had a swing low engulfing pattern. The reason I'm not taking this as a very strong entry, reason number 1, I'm still waiting for the price to make a new high from here and then form this condition. So that is why can be an entry, a weak entry, because price break below 50 EMA, then breaks above 50 EMA and then form this candle, and also the price opened in gap, as you can see right here on this chart, and these are the reason I'm not taking this as a trade. But if you are a very aggressive trader, if you want to take a risk, that is also a valid condition. For me, like I said, I still wait for a good break above 50 EMA. Overall, if you ask my bias is still bullish. I'm still expecting a price to hit the zone above, which is right here on Owanda. 2.885 goes up to 3.005, from where we are going to enter our sell counter trade with bearish engulfers, double tops, inverted hammers or 382 candles. So that is what I'm looking at. As long as price is now trading above this trend line right here, we are still bullish. Once the price breaks below this trend line with good momentum, at least 2 red candle, then we can expect a good pullback followed by bearish engulfer, and price can then fall to the zone below in green, which is 2.342 goes up to 2.426, from where we are going to enter another long trade with a reason like bullish engulfers or double bottom entry confirmation. So that is what I'm looking at for nat gas. I'm still observing the market. If you remember, we observe the market, we look for the conditions, then we take our entries, and then we set our stops and targets. So that is how we need to observe the market like professional traders do. Here on capital.com, as you can see, price is intact with the trend. Once we have a break below, exactly the same, this is the zone to enter your buy trades, which is 2.478 goes up to 2.561, and the zone above is for your sell trades, which is right here. This is a major area, 3.015 goes up to 3.169. The only hurdle is for me is I want to see a complete break above this previous high. In that case, we have a very good bullish confirmation. Overall, it's bullish. I'm still expecting a price to hit this zone after we have a break of this previous high. So at least I'm expecting a price to push till this previous high, and then I'll see how the price action reacts. Let's check gold. Gold has now broken above 50 EMA. So at this point, if you know, once price breaks above 50 EMA, we cannot quickly enter buy trade. We look for another green candle. Once we have that, we have a good momentum above 50 EMA and a possible change in trend. So once we have that, I want to see another green candle, and then I want to see a pullback above 50 EMA with followed by a bullish engulfer. Once we have that, we are good to go long, and the next zone to sell is right up there, which is 1944.99 goes up to 1959.67, from where we are going to enter sell trades with bearish engulfers, double tops or inverted hammers or a 3-2 candle, whatever you want to call it, one of the bearish reason to enter the trades. Now, if you have a dramatic push down, this week we had lots of news events, and if a price pushed down due to news event, I want you guys to have these zones, a zone below on your charts as well, which is a level of minor resistance, which is 1873.11 goes up to 1887.93. If that happens, we are good to go long with bullish engulfers or double bottom entry confirmation. So have both zones on your charts, and we're going to enter the trade, pull back trades in between this zone, counter trades once the price hit the zone above, counter trade bullish when the price hit the zone below. So look for conditions and DM me if you have any confusions. White here on silver. Silver has also broken above 50 EMA, exactly the same as gold. Good momentum, pull back and keep on taking longs until the price hit the zone above. In red, which is 24.02, goes up to 24.60, a zone from where we're going to enter sell trade with bearish engulfers, double bought, double tops, pin bars. Now if the price pushes down, hit the rejection area like this due to a news event, it can possibly push down as well. So we need to be prepared for these type of situations. So have these zones, 22.12 goes to 22.25, from where we are going to enter another long trade. So have these zones on your charts, look for conditions. Once we have a condition, we have no hesitation to enter your trade, and make sure you place your stop loss and take profit both. Right, last one, we have crude oil. Crude oil has broken above 50 EMA. It is trading above 50 EMA, and we had a nice 382 candle above 20 EMA. That is another strategy my students are learning in the full course. We had a valid condition, price is now pushing up, and now I'm expecting a good reason to enter, which is something like bullish engulfer with a pullback. Once we have that, we are good to go long. So overall the price looks bullish to me, and only going to enter long trades until the price hit the zone above, which is 76.63 goes up to 78.93, from where we're going to enter sell trades with bearish engulfers, double top, entry confirmation. I also want you guys to have the zone below in case of a dramatic fall or a news event. As you can see, price is constantly making lower lows, so have the zone below. If we have a push down to 63.87 goes to 66.26, from where we're going to enter our buy counter trade. So it's the start of the week, we can expect some good momentum throughout the week, so you need to have these zones ready on your charts. For now, we are only looking for buy trades with conditions only. So that is it for commodities, guys. Any questions, any confusions, you can always DM me on Instagram. I'll get back to ASAP. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.